Hi, good evening. Can you all hear me? Is my screen visible? All okay. Mhm. Good evening, Imtiaz. Okay, you can hear me. Even Chetan is saying that all is okay. It's really nice to see you people, practicing and doing paper trading, and we feel really happy when we see those who are already in the market, they are making some good profits. Because yesterday only we discussed that how you all lost money trading on the tips that were provided to you by other people. But now after learning technical analysis, you can, do your own analysis, filter out your own stocks. You don't need to depend on others for any tips or anything. See, even though we are in a tense situation from last 2 days, but the calls that we are giving on Telegram channel, they are also hitting the targets. It feels really nice when your calls hit your target. The more your calls hit your target, the more boost it will give to your confidence. The more you see green color, the more profit that you see in your portfolio, this will boost your confidence. So keep on practicing as much as possible. So let's begin with today's session. Today we'll see option chain analysis. I will go to the NSE website, live market. Live market will go to equity derivatives, and over here we have the option chain of Nifty. Now here you can see this is the current price of Nifty 10,806. This is where Nifty closed today. And this over here tells you the expiry, that is 28th Feb, that is tomorrow is the monthly expiry for Nifty. If you drop down this menu, then you will get all the weekly expiry and the monthly expiry. And this is Nifty. This is showing, if you drop down this menu, then you can see the option chain of Nifty IT, Bank Nifty, Nifty Mid 50. Or if you want to see option chain of any other stock, that then you can write it over here, the name of the stock, and you can see the option chain of that stock as well. Now here on the left hand side of your screen, you can see this is call section, and on the right hand side it's puts. Now if I say in layman's language, calls means if you are bullish on the market, then you will buy calls, and if you are bearish on the market, then you will buy puts. Now let's look at the some of the columns. See this column, this is of open interest, the total open interest on any strike price. Here in the middle you can see strike price. Here there are different strike prices are given of the option chain. These are the different strike prices. And this is the open interest, which tells you that how much is the total open interest on each strike price. This second column is your change in open interest. This is of volume, this is implied volatility, this is last trading price, that is the premium of each strike price, this will tell you. And net change, this shows you what change took place or what change happened in the premium price. This is your bid quantity, the bid price, ask price, and this is your ask quantity. Now the same columns are available on the put side as well. Now if you see the call and the put side, then you can see that half of this is in yellow color. both on the call side and on the put side. So this shaded part, these are all in the money contracts. These are known as in the money contracts. And the white part is known as out of the money contracts. Similarly, on the put side, this is your in the money contract, the shaded part, the entire shaded part is your in the money contract, and this white part is your out of the money contract. Now, what is the meaning of in the money contract? Now, if I say on the call side, see that today the closing price of Nifty was 10,806. So all the strike prices below 10,800, these are your in the money, and all the strike prices that are above 10,800, this is your out of the money. And as far as puts are concerned, this is just the opposite. All the strike prices that are about 10,800 will be considered as in the money in the put side, and all those which are below 10,800 are out of the money on the put side. Now the columns that are important to us is first is this open interest column. Now open interest, as we discussed yesterday, open interest tells you the total number of open contracts in the market. Now we analyze option chain first to find out the support and the resistance. We can find out support and resistance from the option chain. Now to find out support and resistance, what we have to see is where there is maximum open interest on which strike price. So now if you see the maximum open interest that is on 11,000 strike price, that is 49 lakhs 11,450. So this you can say is a resistance for Nifty, because the maximum open interest is at 49 lakh 11,000, is of 49 lakh 11,000, that is on 11,000 strike price. Now if we look on the put side, now call side will always tell you your resistance and put side will always tell you your support. So if you want to look for a resistance on the, you will look on the call side where there is maximum open interest on which strike price. And if you want to look for a support, you will look on the put side where there is maximum open interest. So if we see right now, maximum open interest is at 10,800 level, that is 20 lakh 81,000. Though we have on the lower side, there is open interest of 30 lakh 31,000, but that is, very far from the current price. So your immediate support for Nifty is at around 10,800. 20 lakh 81,850. So this is your support for Nifty. 10,800 is your support for Nifty, and 11,000 is acting as a resistance for Nifty. Now, if we look at the change in open interest, now change in open interest column is also very important. Wherever there is highest change in open interest, so that strike price acts as a resistance for that day. Now, if you look at 10,950, so today the highest change in open interest was at 10,950, that is 6,86,175. So today 10,950 was the resistance for Nifty. As you can see in the chart as well, that Nifty made a high of 10,939.70. It was not able to cross 10,950 level. Similarly, but if we see on the put side, there is all the figures are in minus. Now we can also find out where the long positions are being built or where the short positions are being built by looking at the option chain. Now we saw four scenarios when we saw the list on money control, that is increase in open interest and increase in price, increase in open interest and decrease in price, decrease in open interest and decrease in price, and decrease in price and increase in open interest. So now if we analyze the option chain, so we have to look at the premium side, we have to look at the premium, the net change, and we have to look at the change in open interest. These three columns we have to look to find out whether the long positions are being built or whether the short positions are being created in the market and at what strike price. So this will give us the direction of the market. This will tell us the sentiment of the market, that what actually people think, that whether the market will go up or whether the market will go down. Now, if we look at the 11,000 strike price, or in fact, if you look at all these strike prices, you can see that there is a change in open interest. Look at the change in open interest. Look at the last trading price, that is the premium, and the premium is decreasing in all these strike prices. That is, your open interest is increasing, but your prices are decreasing. Your premium prices are decreasing and your open interest is increasing. That is, short positions are being created on these strike prices. That is 11,000, this 10,900, 10,950, 11,000. So new short positions are being created on these strike prices. Now, when we talk about long or call, the meaning of long in call and put are different. When you are bullish on the market, that time you will create a long position. But when you are bearish on the market, that is the time when you will create a long position in puts. So now when people are creating short positions on the call side, that means they are bearish on the market. They are expecting the market to go down. That means market will not be able to cross this 11,000 mark that easily. Whereas if we look on the put side, the change in open interest, if you see, all these figures are in minus. And if you see the change in open interest, that is the change in your premium is also negative. That is, your open interest is also decreasing and your price is also decreasing. That means those who created long positions on the put side, now there is long unwinding going on the put side. Now when people create long positions or in put, when they are bearish on the market, that means now they are covering the long positions, they are squaring off the long positions. Either they are expecting the market to go up now. And if you see here at in the money strike price, even at this level, if you see this figure, the change in open interest is in minus, and if you see the net change in your premium, this is positive. That means your open interest is decreasing, but your price is increasing. That means short covering is happening at this level. Your open interest is going down, but your price of the premium is increasing. So those who created short position on 10,850. Now when people create a short position on the put side, when they expect the market to go up, but here they are again, there is a short covering happening at this level. Similarly, if you see the 11,000 strike price, see the change in open interest is 10 lakh 10,000, and if you see, though the change in open interest is not much, but you can see that the change in open interest is positive, and your net change, that is the price of the premium, is also increasing. That means your open interest is increasing and your price is increasing. That is, people are creating long positions at this strike price, that is 11,000. Now when do people create long positions in put? When they expect the market to go down. That means if you see the 11,000 strike price, people on the call side, the people are creating short position. That is, they are not expecting the market to go above 11,000. Similarly, on the put side, people are creating long positions on the 11,000 strike price because they are expecting the market to go down from this level. So 11,000 is your resistance, a strong resistance for the market right now. So when you are analyzing option chain, you need to analyze this as holistically. You can't see just one strike price. You need to see open interest, where is the maximum open interest, where there is maximum change in open interest, and what is happening to the price of the premium, whether the price of the premium is increasing or decreasing, and you need to correlate it with the change in open interest, and then you need to correlate the call side with the put side to actually make up a mind whether what the sentiment of the people appears to be in the market. So now tomorrow is expiry, so we can expect that market will not go above 11,000 because people are short. Now new short positions are created on the 11,000 strike price, and on the put side people are creating new long positions as well. Now if we see the next week's expiry, so if we see 11,000, so here your see in this your next week's expiry, your maximum open interest is at 10,900 level, which is 4,59,000, and the change in open interest is also highest at 10,900 level today, that is 1,03,500. Now if you see over here, your open interest is decreasing and your price is open interest is increasing and your price is decreasing. That means now short positions are being created at 10,900 level for the next week. Because if we see the 11,000 strike price of the next week, then in this case you can see that this figure, the change in open interest is negative 58,000 minus, and the premium per rate is also going down. So open interest is decreasing and price is decreasing. That is, people those who created long position at 11,000, they are now squaring off their positions. And fresh short positions are being created at 10,900 level. Similarly, if we look at the put side, so at 10,800 is your maximum open interest. That is 6,70,125. And the change in open interest is also maximum on that very level. That is 3,26,000. And you see open interest is increasing and your premium is also increasing. That is, long positions are being created at 10,800 level for the next week. That means short positions are being created at 10,900 level, and new or long positions are created on the put side at 10,800 level. So people are not expecting market to cross 11,000 mark that easily. In fact, in the next week we can expect a somewhat correction in the market. But this option chain is very dynamic. If you sit in the live market and if you analyze the option chain, then option chain the data changes very quickly. So you need to analyze that. So tomorrow after the expiry only we can analyze further that what will be the condition on the next week. But what we can make out from the present data, today's data, we can say that Nifty will not be able to cross 11,000. And today 10,950 was the resistance for Nifty. Now tomorrow morning we have to see where call writing is happening and where put writing is happening. Now when we use the word call writing and put writing, means people creating short positions, whether be it call or whether be it on the put side. Like for this we can say that today people created short positions. New shorts were created on 11,000. Now when people are bullish on the market, they will buy a call, and when they are bearish on the market, they will sell a call. Similarly, on the put side, if people are bearish on the market, they will buy a put, and when they are bullish on the market, they will sell a put. Now, if we take example of like TCS we were discussing yesterday. Now, at this point when we were bullish on TCS, there are two things that we can do. Either we can buy a call of 2,000 or we can sell a put. Similarly, if you see any correction in any stock from the upper level, so what you can do is you can sell a call at that time or you can buy a put at that time. So as far as the long positions are concerned on the call side and on the put side, so you have to be clear when long position, because the meaning of long in both calls and put are different. When the long positions are created in call and when the long positions are created in put, and what is the meaning of both. So you need to analyze the entire data, where there is maximum open interest, where there is maximum change in open interest, and what is happening to the premium price, whether it is going up or whether it is going down. Now, if you look at these strike prices, see all the figures in the change in open interest are in minus, and if you see the premium is also going down, that means your open interest is decreasing and the price is also decreasing. So all the long positions are being squared off at these levels. Now, if the positions are being squared off, then you need to see where these positions are being shifted. Why only 2000 strike price? Not necessary. See, what you can do is you can choose any strike price, but don't go too out of the money. Otherwise, it will not hit that your target. So see, if we look at TCS, so where was TCS at this point? TCS was somewhere around 990. So maybe you can select 2000 strike price, or you can select 2020 strike price, but don't go too out of the money. So you go and buy 3000 strike price. It should not be like that. Whatever trading you are doing based on option chain analysis, so you can see if I want to trade in Nifty. So Nifty right now is 10,806. So if I want to trade, what I will do is I will see where there is maximum open interest, where is a barrier for Nifty. What is the resistance area for Nifty? So based on that, I will take a short position in Nifty. So similarly, if you are, see, I just gave an example of 2000 strike price. When you want to take a trade in any FNO stock, in any future stock based, if you combine it with your technicals, if you combine the analysis of option chain with your technicals, then you can see the option chain and you can decide where there is, maximum open interest on the call side. That is where is the resistance and where is the support. So based on that, you can decide your strike price, if you want to take a long positions or you want to take a short positions. Now, as I said, if you also have to see where the long positions are being created, where new long positions are getting built up on the call side. So it's better to take that strike price for your trading. If you want, we can check the TCS. Now this is TCS. Now we were talking about 2000 yesterday. So if I want to see first, if I want to analyze, if once I have seen the charts, technical charts, and I know that the stock is positive, but if I want to trade into options, then I have to see that at what point, at what strike price, the long positions are getting built up. That is, the open interest is increasing and price is increasing. But right now, if you see today, at all the levels, your open interest is increasing. No, your open interest is decreasing, but your price is increasing. That is, short covering is happening at all these levels. See, all these figures are in minus, and if you see the strike, the net change in the premium, this is positive. That is, the price is going up, but your open interest is going down. So those who created the short positions, they are covering the short positions. So now, if you want to see where, because at that time when we saw the stock was around 10,990. So if stock was at 10,990, the best possible strike price that was available to you was either 2000 or 2020, because you can't go too out of the money to take a position. For selling put in TCS, we have to choose higher strike price is around 2100. No, why will you choose higher strike price 2100 if you want to sell a put? See, when will you sell a put? When you are bullish on the market, when you are expecting the market to go up. So why you want to sell 2100 put? See, when we talk about option chain, if you see any option chain, whether you see the option chain of an index or you see an option chain of any stock, all these in the money contracts, the premium in the money contracts are very high compared to out of the money contracts. So if you want to sell the option chain of 21, so today its price is 43.95. So yesterday maybe it was something else, or day before yesterday, that we can check from NSE website. Let's check it. Equity derivative. No, wait. Products, equity derivative, historical data, contract wise search, stock option, TCS. Because whenever you are selling an option, your premium will always be higher. 28th Feb, PE 2100, 7 days data. So see, on 25th, the premium was around 112. So now if you check how much premium is required, how much premium you are supposed to pay. So actually this will give us, today's position. Sell, add. So around 1 lakh rupees you are paying for, 1 lakh rupee you will be paying as a premium. Now this is today's condition. Today whatever is the price of 2100 put. Now yes, on 25th, if we see the day when we analyze this stock, this was 25th. If that day, if you see, the price was of 2100 put, the price was 112. So that day your premium will also be somewhat higher. Though if you see, if you have sold 2100 put on 25th, that is at 112 rupees. So today the last trading price is 46. So it can give you good return. And similarly, if we check, see, even if you have shorted 20, 20,000 strike price put, so the price was 26, and from 26 it has become only 4 rupees today. So whenever you want to select a strike price, don't go too out of the money. You can check any other strike price, like if we say the stock was at 1980, so if we choose 2040 strike price, so see, from 57, now the price of put today is 10 rupees. So how much is the profit? The lot size is 250. But the thing is, whenever you are selling whenever you are selling an option, the premium is always higher. You have to pay a higher premium comparatively to what you pay when you are buying an option. all these factors you need to combine, you need to analyze that if the long positions, there is a long unwinding, then where the people are shifting now, on what strike price the people are focusing. So based on that, where the new long positions are being created or where the new short positions are being created, based on that you can do your analysis by looking at an option chain, combine it with your technicals, and you can trade into calls and puts. But trading into options is very risky. First, only trade into cash market. Don't trade into options until and unless you have a good enough experience to trade in the market, because this option chain is very dynamic. It changes very fast. The change is very fast because this actually shows you the sentiment of the people in the market. Now tomorrow being expiry, if you sit in the live market and you keep a watch on the nifty, on the nifty option chain, then you will get to know that how it changes so quickly, where the call writing is happening, and where there is maximum change in open interest on the call side or where on the put side. So right now the biggest barrier for nifty is 11,000, and if we have just looked at next week's expiry. If we see, the 11,000, both these figures are negative. That is, people those who created long positions are squaring off their position at this point, and 10,900 is acting as a resistance as of now for the next expiry, because maximum open interest is at that level, change in open interest is maximum at that level, and your open interest is increasing and your price is decreasing. That is, people are creating short positions on 10,900 level. Also, if you see the 10,800 strike price, maximum put writing is at maximum open interest is at 6,70,000 at 10,800 level. Now over here your open interest is increasing and your price is also increasing. That is, people are creating long positions on 10,800. That means the view of people from what we can see right now is that they are bearish on the market. They are expecting a correction in the market from the higher levels, because anyway market is, if we look at nifty, is close to 11,000 mark, which is its resistance area or supply area, as you can say. Also nifty closed below 250 moving average. So now tomorrow after expiry, how these figures changes, that we have to see. So this way you can find the support and the resistance, and also you can see whether at what point this, what is the direction of the nifty. If your put writing, if is shifting towards the lower level, and your call writing is also shifting towards the lower level, that means the direction of the market is towards the downside. People are expecting the market to go up, whereas if the call writing is happening on the higher strike prices and your put writing is also happening on the higher strike prices, that is, the support is shifting from the lower level to the higher level. In fact, the resistance is also shifting from the lower level to the higher level. This gives you an indication that the market will move in an upward direction. Right, so any questions in option chain? Everybody understood the option chain? Okay, any question from any other topic or anything that you want me to repeat that you have not understood? Or you guys understood everything what we have covered till date? See, option chain is a bit difficult, bit complicated, but when you start watching it on a daily basis, when you'll start analyzing it on a day-to-day basis, that is when you will get a clear picture as to what is happening in the market. See, technicals are very, that's why it is said that you should not trade into options. The options should be your last preference because it requires a lot of practice, a lot of understanding. But once you understand the option chain, then it will become very easy for you to, predict the direction of the market, that what actually the people are thinking, whether the market will move up or market will go down. So the main thing first, what you need to see, Chetan, in option chain is that where there is maximum open interest. Now, if we look at this February option chain, if you see the maximum open interest is at 11,000 strike price, that is 49 lakhs. That means 11,000 is acting as a resistance for Nifty. It will not be an easy task for Nifty to break the 11,000 level. So this, that there is a barrier for Nifty on 11,000. Now on the put side, you have to see where there is maximum open interest. So if immediate support, if you want to see, is at 10,800 strike price, that is 20 lakh 81,850. See, Nifty right now is at 10,806. So whatever action will take place will be around these strike prices only, will be at around the current level of Nifty. You don't need to see these higher strike prices at 10, 9,850, 9,900, because whatever action is happening will be around the current level of Nifty, around these levels only. Especially, people are more interested in out of the money contracts because the premium is less compared to what is there in the money contracts. If you see in the money contracts, the premiums are very high, 304, 350, 402, 459. And if you see the out of the money contracts, the premium are comparatively very low, 25, 10.95, 3.40. So whatever action will happen around the current level. So if you see at the current level, the maximum open interest on the call side is at 11,000 strike price. So this will act as a resistance for Nifty. And on the put side, the maximum open interest is at 10,800. So 10,800 is, yeah, as an immediate support for Nifty. Now this we saw overall. Now if you want to see for a particular day, what will be the resistance of Nifty? So if you see 10,950, change in open interest, where there is maximum change in open interest, that strike price will act as a resistance for Nifty for that particular day. Now today on Wednesday, the highest change in open interest was at 10,950 level in Nifty, that is 6,86,175. So you can see the chart of Nifty. Nifty made a high of 10,939.70. It was not able to cross this level 10,950 because this acted as a support, as a resistance, as the maximum change in open interest was at this level. Now if you see highest open interest along with highest maximum change in open interest at the same strike price, so that is a clear cut signal, that is a clear cut confirmation that this strike price is a very strong resistance for Nifty. But what we are seeing over here is that maximum open interest is at 11,000, but today the change in open interest is maximum at 10,950 levels. So 10,950 acted as a resistance for today for Nifty. Now tomorrow again we have to see where there is maximum change in open interest on the call side. Similarly, you have to see on the put side, but if you see on the put side, the figures are in minus. So there is no actually put writing happening at any of these levels. Now the only place that I can see is 10,200 where there is change in open interest 1,40,000, but that is too far from the current level. So we will not consider that. But if you see all these strike prices, so there nothing because all the figures are in minus. Now the next thing that you see is where the long positions are getting built, where the short positions are getting built, where short covering is happening, where long unwinding is happening. So for that you have to see the net change and the change in open interest. Now when long positions are getting built, that means open interest is increasing and price is increasing. And when short positions are getting when the shorts are being created, that means the open interest is increasing but the price is decreasing, the one that we saw yesterday. Now for short covering, the prices are increasing but your open interest is decreasing because people are covering their short positions. So naturally the open positions, they are squaring off the open positions, so open interest will go down but the prices will increase. Similarly for long unwinding, the open interest will also go down and the prices will also go down. So now if you see on the put side, the change in open interest, these figures are in minus. That means your open interest is decreasing, right? And if you see the change in your premium, this also is decreasing. That is, your open interest is decreasing and the price of your premium is also decreasing. That means those who created long positions on the put side, they are squaring off their positions. Now when people create long position on the put side, when they are bearish on the market. Similarly, if you see over here at this strike price, 11,000. So there is change in open interest, though it's not much. It's only 27,675. That means there is increase in open interest and the your premium is also increasing. So premium increasing, open interest increasing. That is, long positions are being built on the put side. Now, when people create long positions on the put side, when they are bearish on the market, that means people are not expecting Nifty to cross 11,000 mark. That is why they are creating long positions on the 11,000 strike price. So if you see, if you analyze this strike price, particularly 11,000, so people are creating short positions on the strike price. On the call side, if you see, there the new shorts are created because your open interest is increasing and your price is decreasing on all the strike prices, especially on the 11,000 mark. That means this is acting as a resistance. Now new short positions are created on 11,000 and new long positions are created on the put side on 11,000 strike price. That is, it is not easy for peer market to cross 11,000 mark. This is acting as a strong resistance for the market. So you need to analyze this holistically. You need to analyze the entire option chain on the call side, on the put side, where there is maximum writing, where there is maximum open interest, where there is maximum change in open interest, also where there are long positions are getting built or where the short covering is happening or long unwinding is happening. That will give you a clear picture of the entire market. First, you just start looking at an option chain from the point of view of support and resistance. Just see where there is resistance and then where there is support. Once you see that, then you see where there is maximum change in open interest on which strike price. So you will get an idea that for that particular day, what can be the resistance area of the Nifty and what can be the support for the Nifty. Then later on you go on analyzing this premium with the change in open interest to find out where the long positions are being created and where shorts are being created. Go step by step. First, only look at the broader picture where there is support and when there is resistance in Nifty. That's it. Then take the second step further. Anything else you guys want to ask, or it's still difficult? In class of stock selection, you told we have to see Nifty 50 first, then sector wise. If Nifty is negative, most of the sectors will be negative. How do we select stocks in that case for buying? Most of the sectors will be negative, but you have to see. Let's go to NSE website. Let's go to indexes. Now, see, Nifty is negative 0.26. Now, which sector is more negative than Nifty? First, we see that. So, if you see the sector which is weaker than Nifty is one is media sector, that is 0.88. Then you have private banks, that is 0.61. Then you have financial Nifty Bank, that is 0.57. Then Nifty Financial Services, that is 0.54. Now suppose if I take Nifty Financial Services, if I select Nifty Financial Services, now this sector is more weak than Nifty today. So now if I want to select a stock, then I will not select stock from the top. I will select stock from the lower level. Like you see IB Ventures, Edelweiss, Kotak Bank, those which are negative more than 1%. So out of these 3-4 stocks, you can look into IB Ventures, you can look into Kotak Bank. Like when Nifty is positive, what we see, say if Nifty is positive 1%, then we see which sector is positive, more positive than Nifty. If there is any sector which is more positive than Nifty, we go into that sector, then we select the stock from the top, which are more positive in that sector. Similarly, it's just the opposite when the Nifty is negative. Like yesterday also, if we see Nifty was negative, and in that negative sector, we filtered out some stocks, say HDFC. So HDFC went down today. Though I didn't post it on the Telegram channel, but HDFC was there, MFSL was there, Godrej Property was there. So MFSL and Godrej Property were positive today, but HDFC today went down. So similarly, if today you see Nifty is negative 0.26, now you see which sector is more negative than Nifty. So media is more negative than Nifty. Then second is private banks is more negative. Then Nifty Bank is also negative. Financial services is negative. Now see Kotak Bank. Kotak Bank we saw in financial services also. Now Kotak Bank is there in private bank also. So let's look into Kotak Bank. Whether there is any trading opportunity based on our setup. See Kotak Bank, if we see the daily chart, it is below 250 moving average, and see the slope the 10 moving average is making. And below this level, below 1216, see the RSI, see the steep fall in RSI. Now you can look into the weekly chart. See, in weekly chart, it broke the 50 moving average support. It is below 50 moving average support, and this is exactly the support area that we marked on the daily chart. Now you can look into the 4-hour time frame. In 4-hour time frame, it is on 200 moving average support, which is at 1212. 1-hour time frame. Now, if you are taking a short trade, what you can do for your target and everything is you can use a GAN calculator for your intraday trades. This is GAN square of 9. Now, suppose if I want to short Kotak Bank, so its last closing price is 1216.15. So all that I have to do is and calculate, and this will give me all the recommendations, buy levels and sell level. See, sell is giving me below 1207, and these are the targets that it is giving me. And in case if there is a bounce from the support, then you can see you can buy about 12.1216.26, and these will be your targets for intraday. Now when you are doing intraday trades, you can either use pivot points for your support and resistance, or you can use GAN levels for your support and resistance and for your targets. Because in positional we are marking our levels based on price action or based on support or resistance. It can be moving average also, but for intraday it's better if you use GAN calculator. You can even download the app GAN square of 9 in your mobile, and you can use this for your intraday trading purpose. In fact, whatever targets for intraday we give, these targets are based on the GAN levels. See, the only way to identify a false breakout is if breakout takes place with a volume. Always associate volume with your stock. Whatever breakout, if the breakout is with good volumes in the stock, that means that it is not a false breakout. But if the breakout is happening and the volume is very less in the stock, there is no volume in the stock, then you can say that it is a false breakout. It's like when a stock is trading in one particular range. So whenever it will break that range, it needs a pressure, it needs full force to break, and that force will come along with the volumes. It's just like a spring. When you press a spring, and when you leave the spring, the way it jumps, it's the same effect. Whenever the stock will give a breakout, if it's a strong resistance on the top, so for stock to give a breakout from that resistance, it needs a force in case of stock market is a volume. If the breakout is taking place with good volumes, then it is not a false breakout. Also, what gap up opening you're talking about, let's look into Oberoi reality. Now, when did you take a trade in Oberoi reality, Vijay? And was it your positional trade or you were doing intraday in Oberoi reality? At 520. No, but which day you are talking about? I don't see 520 neither today neither yesterday. The high today was 509 and yesterday high was 495. Red candle, okay. So let's analyze this stock. See, firstly, that's why I tell you that always mark your levels. If you have marked your levels, then you know at what point to enter. And if this is the scenario that there is, the stock opens gap up. Now, if you see this level, 509.85, you see this is your tweezer top. So your entry, if your stock opened at 2520, so there was no point in taking a position in that stock. When the stock opens gap up, see if your entry is at 510, if it opens around 511, 512, then it's okay. But if your entry is at 510 and the stock opens around 520, there is a 10-point gap up, then there is no point in taking entry in that stock. You should rather wait for it to cool down, wait for it to come down. There was this gap up opening in Oberoi Reality because there was this positive news about the reality sector, that GST thing. Even I gave it on your Telegram channel, and but I gave entry above 510, and my targets were 520 to 525, and it opened at 520 only, and made a high of 525, and from there it retraced. So if there's such a gap opening, then there is no point in taking a position in the stock. Never run behind any trade, because there are many trades available in the market that you can do. Never run behind any trade. अगर बहुत ज़्यादा gap up open है, let it go, or let it cool down, let it come back to your entry level. The reason why we are marking this level is because this is a resistance for us. So when the stock will cross this level, so this will act as a support for us. In fact, the reality sector that day was not performing in spite of the good news. Most of the stocks were not performing, even DLF and all. Sometimes there is insider trading going on. People, they buy the big FIIs and DIIs, they buy before the news is out, and when the news is out, they quickly book their profits and they exit. So I think this is the same thing that happened in this reality sector, because they were expecting government to make an announcement on GST, so they were long in all these stocks, and when the news came, they quickly booked out, they booked their profit and they exited their positions. This I have seen many times. I have seen many stocks where the results are good, but still, in spite of good results, the next day the stocks are falling. And the stocks where the results are bad, the next day I see the stocks, they are giving good movement. So these all movements are based on inside information or inside trading. We can't help it because we are retailers. We can't get this kind of news like FIIs and DIs. We don't have that kind of sources. Apollo Hospital. There was some news in Apollo Hospital as well. But Apollo Hospital, I told you guys to keep it on radar about 1152. I said, I think, and it gave a good movement. It went up till 1198. In fact, I gave it on your Telegram channel when the stock was consolidating around this area 1152. Results were good, but stocks fall. 6%. Yeah, so these are all inciting insiders trading. These people, these FIS, VIS, they have their sources. You guys have seen that movie, the new movie Bazaar, Saif Ali Khan, that is based on the stock market. They have shown the same thing, how they manipulate the market, the big players. And we retailers, we get trapped in this kind of situation. But anyway, we can, to some extent, we can, whenever we should avoid trading in any stocks, when there is a result or something, or any there is some news in any kind of stock, avoid trading in these kind of stocks. On any event day, avoid trading on that particular stock. That is the only way we can, save our capital. So I hope you guys are now able to filter out stocks. Any problem in stock filtration or any topic? Though next week we will have 3 or 4 sessions of stock filtration daily. We'll sit in the evening and we'll filter out stocks. So that will give you more practice, because now I think only your fundamental analysis is the only topic that is left. If there's any other topic that you want to repeat, so we can repeat that topic. See, always trade in the direction of Nifty Imtiaz. If Nifty is negative and you are filtering out stocks that are positive, so if the stocks are positive on technical basis, then they might not give you good run up, good rally until and unless, because see, if Nifty is in the positive direction, then all the stocks will move in the positive direction. If Nifty is negative and you are filtering out positive stock, then the stock will consolidate for 3 or 4 days, and then it will give you movement. Like if we see Mahindra and Mahindra, what happened in Mahindra and Mahindra? Though the stock was positive, if we look from the technical point of view, but it was only today that it gave some movement. So try to filter out stocks which are in the direction of the market, because it's always easy to swim with the flow of the river. And if I ask you to swim against the flow of the river, then a lot of pressure, a lot of energy is required for that. Same is the case in the stock market. To trade against the market is very difficult, because see, yesterday when I saw Nifty was negative, and the financial sector and all these sectors were negative. But today morning, when Nifty was positive, all these sectors also turned positive today. It's always a good decision to trade in the direction of Nifty. If you are filtering out some cash stocks, then cash stocks are not affected that much by the movement of Nifty. They move in their own direction. Especially the FNO stocks are the ones that are most affected by the movement of Nifty. Fine, any more questions? Then we will conclude for today. we'll meet you tomorrow next same time. Tomorrow I think we'll cover your fundamental analysis as well. Then let's see what we'll do on Saturday. Let me know if you have anything in mind, any topic that you want me to cover that you have not understood, so we can repeat that thing again. Or what we can do is tomorrow when we'll do the fundamental analysis, I will tell you other websites as well that you can use that are free for your analysis, whether be it fundamental or be it technical. And if, as I told you, if you want to do intraday, then please download GAN square of 9 calculator app in your mobile. So this you can use for your intraday purpose, for your targets and for your entry points. And keep on practicing. Fine, fine then. See you guys tomorrow. Bye. Take care.